Alright, I want to show you guys something I've been doing these past few weeks. I found something that works really well when the stock market's, taking a crap, or if you find something that's, trading sideways. Past few days, market hasn't been that great. Um, but this whole month in general, I've been playing a lot on things that are trading sideways. Sideways meaning it doesn't really move at all. Like, let's look at GoPro. The past week, it hasn't gone up or down a significant amount. It's gone, up and down a couple cents. A couple days ago, yeah, August 10th, it did spike up all the way to $11. $11, about 40 cents almost. So it went up a bit. If you're playing this strategy during those few days, you might have lost a little bit of money. But you could have also just held it through, and like, as long as it's trading flat, you're pretty good. So for this strategy, you have to rely on something that's trading sideways. GoPro is one good option. I'll show you a few other ones. I've been doing this on silver. The silver trust fund does trade sideways quite a bit, but it does have a little more volatility. And then Hormel Foods, food company, also trades pretty sideways. It did go up and down quite a bit a couple days ago, but if you can get this strategy in when it's flat right here, like right here it's flat, you'll make profit. But yeah, it did go up about $1, but then it went down about $1. So I mean, I've played it on Hormel too. I've made profit. Did it on silver, made profit. I like doing it on GoPro though. GoPro's a little easy. It's also quite cheap. I'll show you the strategy, how much it costs, what you're risking, and what your potential gains would be. So let's look at September 3rd. Now, normally when you play this strategy, you kind of want to go something within a week or two. If I were to enter this, I would do maybe August 27th, but I'm not going to use that as an example because I'm in that position right now. It wouldn't give me the correct calculations if I were to enter anything because I'm already in that, and it would give me different numbers. So let's just look at September 3rd. It's a little further out. I wouldn't go that far out because you want something to trade sideways. When you go far out, you have, volatility. Maybe it goes up or down. Maybe there's a catalyst. What if GoPro announces a new camera or something? And then all of a sudden next week it goes up in value, or maybe people don't like the camera. It just absolutely fucking tanks. I don't know. Either way, usually a week or two you want to go in. Now I'm just going to show you the strategy, and then I'll explain why it goes that way. So let's say September 3rd, you think GoPro is going to be $9.50 exactly, or around that range. What you're going to want to do is sell a call for the $9.50 strike. All right. Now you're going to want to buy a call above that strike for the $10 strike. You're also going to buy a call 2 strikes below your sell. So under that $9.50, you hit $8.50. You're going to want to buy this one. Now this is quite bullish. So it says right here, you're going to make profit only if GoPro is above $10.14. So you need to be above this to make profit. But that's not what we're going to do. This does cost $115 to enter. But again, this is not the thing that we're going to do, because you need to be bullish on this. It could hit that range. I believe it could hit above $10, whatever. But then you're only going to make like $50 profit if it hits around that range. It says unlimited if it goes beyond $11, but I don't think it's going to hit $11 by the 3rd. So you could potentially make $50, but then you could also lose your 115 if it dips down. So how do we make this safe? What you want to do is click on this arrow at the top. You're going to change the ratios, because this is what's a 1-to-1 ratio. We're buying one of each of these positions. One of each. We're going to change the ratios, and we're going to make it custom. What you want to do is you want to buy 3 of these calls, or you want to buy 3 of these sell to calls. Buy 2. I'm sorry, that didn't make sense. Buy 3 of the sell calls that you think it's going to lie at. So I think it's going to hit $9.50. Let's say, for example, you want to buy 2 of the calls above that. So above 950, you have the $10 call. And then 1 of the 2 below the sell. So if we look at that, let's say we're buying 1 contract. Right now it costs about $30. So we're risking $30. It's much cheaper than the $115. But if you'll notice the chart, it's not necessarily bullish anymore. I don't have to be at $11 to make profit. September 3rd, as long as we are between this, we'll make profit. So between those 2 lines, we're going to make profit. So as long as you're between $8.80 and $9.85, as long as you're between that, you're going to make profit. You could make a max of $70 profit. So you're risking a lot less. You're making almost about the same if you were to do a 1-to-1 ratio. 1-to-1 ratio being bullish. Now, let's say you look at the chart and you say, well, GoPro hasn't hit $8 at all in a very long time. But GoPro has hit $10, so what if this contract hits $10? I'm going to lose money right here. I'm going to lose $30 if it hits $10. So I don't want to lose that $30. I want to be a little bit more bullish. I think it's going to go up. So instead of saying it's going to hit 950, which is right here, it has to hit 950 to make the max profit, roughly about $70. Let's just clear this position. And instead of selling the 950 call, let's make the $10 call our bet. I'm just going to set this up again. Alright. So did the same thing. Sell to open the $10 call, because that's where I think it'll be by September 3rd. You're going to buy to open the strike above that, the 10.5, and then buy to open the call 2 below your sell. So 2 below my sell, 950, 9. Boom. Going to open this guy right here. So I already edited the ratios. You're going to get 3 of those sells, 2 of the buy above, and then 1 of that buy 2 below the sell. We're looking at a $32 cost for entry. So you're not risking a lot. $32 you're putting on the line. But right here, as long as GoPro is between $9.32 and $10.34, you're going to make profit. Even if it's, $9.40, you can make about $10. Same thing right here if it's on the other end. If you're like right on the cusp, you'll make a bit of profit. So it's pretty safe. Now let's say it's between $9.80 and $10.10. That's where you're gonna make like a lot of profit, around $50 profit. But again, it's much safer because GoPro trades sideways anyway, and it's always in that range. For at least the past month, it has been. It's been generally in this good range right here. So I mean, look, $10.20. About $10.10. So let's say next week it hits $10 exactly. I think it could go up a little bit from right now. It is at $9.80 almost. Let's say it hits around 10. That's where I'm going to make profit. Now that's if you buy 1 contract, you'll make about, let's say $50 profit for a $32 cost to entry. And say you just buy 5 or whatever. It's about $160 spent. You can make a max of like $340 profit if GoPro is exactly $10. Now, the reason I'm saying on expiration is because you're going to generally hold this contract till that expiration date. The reason why is because this is a multi-leg option. So multi-leg options are generally harder to close before expiration. You can close them before expiration, usually about a day or 2 if you're lucky, and I'll show you. I did one this morning, but it's just harder to get bidders to buy this because you have 3 legs right here. Let's see, you just have 1, 2, and then three legs. Usually if you were to buy 2, it's easier to close and enter. but it's generally hard with 3. Even if I were to try and put an order for this, this might not fill. So I'm gonna put in a bid for $32. It might not fill right away, so maybe to get a faster fill, I want to enter this position right away. I might say I'm willing to pay $35 per contract. My cost would be $175, so a little bit more, but that's if you want to guarantee to buy this contract. It's just harder to get someone willing to write this contract for you because it is multi-leg. But that's generally how this works. You want to rely on something trading sideways, and you want to try and make a position where you're going to be in profit between where it is currently. So right now it's currently around, generally it's been around $9.70 to $10.40. That's where it's generally been at. And if it's at that same range by September 3rd, as you can see right here, if I'm in that same range on this contract, I'll make profit. All right. Now let me show you a real example of one I did. So yeah, so I've been doing this all month on GoPro and Silver. I did one trade on Hormel Foods. It also was in profit. But let's take a look at this. So I opened a position on August 6th. Pay attention to the dates just so you know like how long this takes. But I opened this and got filled on August 6th. I did exactly as I said, buy 3 sells, 2 buys above that, and then bought the one below. I got 2 of these contracts. That's why it says right here 6 and then 4 and then 2, right? Total cost was $68 for this guy. So I spent $68 for 2 of these contracts in total. A couple of days later, on August 8th, I put in an order to average down. I wanted to buy 2 more. Whoops. Yeah. I wanted to buy 2 more for the cost of $25 each, so $50 spent. That order was fulfilled on August 9th. So on August 9th, you can add another $50 to that cost of $68. Whoops. Let me fix that. 68. So that's about, whoops, that is ugly. Let's just fix that. You add those, looking at a cost of about, I think, $118 spent. Yeah, $118 spent. I submitted an order to close that position. I had 4 contracts, and I submitted an order to close for $60 each contract. Now, since I averaged down, so my cost was $34 on the first bid of 2. I bought 2 more for $25 each. 25. So the average cost is about $29 on average. So I only have to sell them for $30 each to make profit. I'd make $1 profit. But I ended up selling them for $60 each. So $240 is what I sold it for. I spent $118. That's $122 profit. So 118 spent, 122 profit. That's about a 50% gain right there. And that's how you make money on a stock that's trading sideways. It's a pretty safe bet as long as you're in that range, like I said. You could fall a little bit below, and then, hey, you know, GoPro hasn't fallen below $9, so I don't think it's going to fall below this guy. But then GoPro hasn't really gone up this way either, so I don't think it's going to go up above that guy. And if you see the expected loss, if I go up in this range or if I go down in this range, that's the only time I'm going to lose money. I don't think it's going to do that within the next week or 2. It's going to stay in this range because it's just like you can see right here, it's trading sideways. So that's how you set up this strategy. Don't have a name for it. I don't know what to call this, but it just works.